Welcome to Global Crypto AI Pulse. I'm Bert, his personal avatar. As the real Bert is too busy, he asked me to be the presenter for today. Today, we dive deep into how geopolitical instability in Iran is fundamentally reshaping the landscape of global finance. Geopolitical stability is often taken for granted in the financial world, but for the citizens of Iran, it is a constant calculation. As tensions escalate, the traditional safety nets of the banking system are failing, and the rial is in freefall. This has forced a mass migration of wealth into the digital realm, a migration that is fundamentally reshaping the landscape of global finance. Today, we dive deep into this transformation, exploring the battle between Bitcoin's volatility and the strategic stability of the digital dollar. We examine how conflict accelerates the adoption of these tools as critical infrastructure. Between 2024 and early 2026, the intensifying conflict between Iran and Israel has served as a critical stress test for the global cryptocurrency market. This is not merely a regional skirmish, it is a signal to the entire world about the resilience and the fragility of decentralized networks during kinetic warfare. Every drone launch and every precision strike is now reflected in the order books of digital exchanges, creating a real-time ledger of human fear and sovereign strategy. We are witnessing the birth of the first truly digital war of attrition, where code and capital are as decisive as missiles and drones. This period revealed a distinct bifurcation in how digital assets react to geopolitical shocks. Bitcoin remains a sensitive, risk-on asset, often prone to sharp flash crashes during the initial moments of kinetic escalation. When the missiles are in the air, traders often sell Bitcoin for immediate liquidity. In contrast, stablecoins have surged in adoption not as speculative vehicles, but as essential tools for sovereign statecraft, sanction evasion, and regional wealth preservation. This split defines the modern digital economy. One asset is held for future growth, while the other is used for immediate survival in a collapsing fiat environment. Meanwhile, stablecoins like USDT have become the silent backbone of the Iranian economy. Facing a rial that has lost more than half its value in mere months, both the regime and the public have turned to the digital dollar. It allows for the bypassing of the SWIFT system and provides a way to settle international trade that is immune to physical blockades. For the Iranian central bank, stablecoins are no longer a curiosity. They are a core component of their strategic financial toolkit, used to inject liquidity when the traditional system is paralyzed by international sanctions. As conflict looms, citizens find themselves at a crossroads. Do they trust in the volatility of Bitcoin, with its promise of long-term censorship resistance, or the promised stability of the digital dollar? This is the central question of 21st century wealth. Today we explore the data, the charts, and the human stories behind this financial revolution. We look at how a nation under siege is effectively rewriting the global rules of money. Let's start with the event that truly tested the market's limits, the strikes of April 2024. An event that sent shockwaves through every digital exchange in the region. When Iran launched over 300 drones and missiles at Israel on April 13, 2024, the reaction was instantaneous. Bitcoin's price plummeted nearly 8% in less than an hour, dropping from approximately $67,000 to $61,000. This liquidity flush was a direct result of Bitcoin being the only major market open in the middle of a Saturday night. It acted as a global pressure valve, absorbing the collective shock as investors scrambled to de-risk their portfolios, while traditional banks and stock exchanges remained closed for the weekend. The 24-hour nature of crypto provided the first clear data point on the scale of the panic. This was driven by 24/7 market availability. Traditional exchanges were closed, so crypto became the primary outlet for global de-risking. This weekend effect highlights a key aspect of the modern era. Bitcoin never sleeps, even when the world's financial gatekeepers do. However, the market's resilience was equally notable. Within 48 hours, as the immediate military threat appeared contained, the price stabilized. This showed that even in the face of significant kinetic conflict, the digital market has an incredible capacity for rapid absorption and recovery, a trait that traditional finance often lacks. Eventually, Bitcoin rebounded 62% over the following months to hit new highs. This pattern confirmed Bitcoin's role as the market's first responder to geopolitical fear, and a realization of its long-term value as an asset outside the control of any single nation-state. As we moved into 2025, the conflict intensified, leading to what military analysts called Operation Midnight Hammer. This escalation would once again put the digital gold narrative to the test under even more extreme conditions, forcing a deeper decoupling from traditional risk assets. The 2025 escalation, known as Operation Midnight Hammer, saw major Israeli strikes on Iranian nuclear and energy infrastructure. The impact was felt far beyond the physical targets. Bitcoin, then trading above $110,000, dipped 6% to roughly $103,000 in a single day. Over $1 billion in long positions were liquidated in a 24-hour window. Analysts noted that during these acute 2024 and 2025 crises, Bitcoin behaved more like a high beta risk asset than digital gold, often falling in lockstep with equity futures during the initial fog of war. Yet by late 2025, a fundamental shift began to occur. Bitcoin's price became notably less sensitive to the immediate headlines of regional conflict. The growing institutional presence via ETFs acted as a stabilizer against geopolitical panic. These institutional holders had a longer time horizon and didn't panic sell at the first sight of smoke. This decoupling marked the beginning of Bitcoin's transition from a retail-driven speculative asset to a more mature, institutional-grade hedge against global monetary debasement, even in a theatre of war. While Bitcoin was maturing, the Iranian regime was making a much more tactical, sovereign shift. In early 2026, blockchain analytics revealed that the Central Bank of Iran had accumulated at least $507 million in USDT between 2024 and 2025. This was not about speculation. This was about sovereign survival. Facing a rial that had halved in value, and with the country blocked from the SWIFT banking system, the regime used USDT for open market operations to inject dollar liquidity directly into its domestic market to prevent a total economic collapse. This marked one of the first documented cases of a central bank using a decentralized stablecoin as a digital Eurodollar to settle international trade and stabilize a collapsing fiat currency under heavy financial isolation. The digital dollar became the regime's primary defense against total financial isolation. But they didn't stop there. They looked to the busiest and most critical shipping lanes in the world to find a new way to leverage the power of the blockchain. We are talking about the Strait of Hormuz and a new crypto-powered toll system. Perhaps the most unique development in 2026 was the Islamic Revolutionary Guard Corps implementing a formal toll system for the Strait of Hormuz. Ships transiting the choke point were charged up to $2 million per vessel, roughly $1 per barrel of oil. This system allowed Iran to bypass US dollar clearing systems entirely, while ensuring that price volatility, a major deterrent to using Bitcoin for trade, was eliminated. This was the birth of a nation-state toll system operating entirely on crypto rails, effectively weaponizing the digital dollar against the country that issued it. This was the state weaponizing the blockchain. But while the state was adapting, the citizens were fighting for their own individual survival. For the everyday person in Tehran, the conflict triggered massive capital flight. In February 2026, crypto outflows from local exchanges like Nobitex jumped over 700% within minutes, as citizens moved their remaining assets to overseas exchanges or self-custody hardware wallets. The digital refuge was not just a convenience, it was their only way to preserve their life's work as the physical world around them became increasingly uncertain. Despite the Iranian government's attempts to restrict the USDT Toman trading pair, the parallel market for stablecoins remained a vital lifeline. For those in Tehran, these digital assets aren't just investments, they are life rafts. Bitcoin is the long-term escape from centralized failure, while stablecoins are the immediate bridge to survival as the domestic currency crumbles. This dual-track strategy, using one for sovereignty and the other for daily survival, has become the standard for any population living in a conflict zone in the digital age. But this digital refuge is not without its risks. During periods of high conflict, the Iranian regime frequently implemented 99% internet blackouts to prevent unrest and control the narrative. These blackouts caused local crypto trading volumes to crash by 80% as market makers lost connectivity and retail users were locked out of their digital wallets. Cyber attacks also destroyed millions in assets at local exchanges. Yet, despite these infrastructure failures, the 2024-2025 conflict has solidified Bitcoin's status as a first responder and stablecoins as critical regional infrastructure for grey zone survival. Geopolitics has solidified Bitcoin as a first responder and stablecoins as critical regional infrastructure. As the digital pulse of the region quickens, the world watches to see which asset becomes a true standard for security in the 21st century. We've seen how the convergence of geopolitical strife and decentralized technology is creating a new paradigm for wealth. Whether it's the regime using USDT for sovereign statecraft or citizens using Bitcoin as a final exit, the blockchain is the new frontier. Join us next time as we continue to track the pulse of the digital revolution. I'm Bert for Global Crypto AI Pulse. Stay secure.